Hello, everyone, and welcome back. My name is Greg Furman, and this is the Vantage Point AI Market Outlook for the week of October the 10th, 2022. Now, to get started this week, we'll begin with the US dollar index. Now, just a quick note that this presentation is being done Sunday morning prior to the markets open. The reason why it's being done before and not after the markets open is because it is an actual weekly outlook, and it gives traders a chance to prepare for the trading week. So with that said, we'll begin with the dollar index. Now, the dollar here sneaking back above its monthly opening price, firmly above the yearly opening price, the dollar in a strong uptrend. In my respectful opinion only, the dollar is entering into probably its final rally for the year, which would last to about mid-November. The seasonal pattern here is very, very strong. So again, the dollar, all the indicators point that the dollar is going to move higher. Next week, we can see that our predicted differences are turning back to the upside. The point of interest here, the neural index and the long predicted difference, both failing and moving back above the zero line. This is a strong warning that this is just a corrective move lower and the dollar is again getting ready to advance. Now, the event risk coming up this week, I believe on Wednesday, will be the Fed minutes, but I don't think there's going to be a lot of surprises. Powell's digging his heels in. He is going to hike no matter what. The U.S. payroll number, again, in my respectful opinion only, was a non-event on Friday because the Fed has said that it's a non-event. He's hiking and he's expecting weaker labor numbers, and he didn't really get it. So everything is set for another larger hike, I believe, on November when the Fed meets again. But we'll get through these minutes first and see if there's any sign of a pivot. Because again, with these central banks, they flip-flop, they pivot. We don't really know what their plan. I'm not even sure they know what their plan is at this particular time. But for now, we're holding above that critical Vantage Point T-cross long. 111.48. We need to stay above this. Now, we will be in a holiday short week next week. It's Thanksgiving in Canada. I believe the US has Columbus Day. Correct me if I'm wrong, on Monday. So likely a holiday on Monday. So it's going to be a little bit choppy until we get into Tuesday, Wednesday trade. Now, looking at gold prices, again, trying to make that push. We've got a verified resistance zone. That high coming in at 1733. You can see that the market approached that. Gold prices moved to that level and then mysteriously turned down immediately. So again, at least for now, this does appear to be a corrective move lower in gold. But again, if dollar strength really comes out this month in what I believe to be the final rally in the dollar, then gold may hold above this critical Vantage Point level. 1685, this is the level we want to watch. But as you can see, we've got our neural index strength moving lower. This is the signal that concerns me. The medium term crossing the long term predicted difference is warning. Not only is it warning of weakness in gold, this indirectly points to strength in the US dollar. So again, I think at the very least, we're going to test the 1685 mark. Now, with light sweet crude oil, again, oil making a bigger move back up over the Vantage Point T-cross long, but again, this was heavily influenced by OPEC. So in most cases, those type of moves don't carry much weight for very long. So I think right now we can probably target the Vantage Point verified high, which is 97.24. But at that particular level, I don't anticipate further gains in oil. But again, we will assess it week to week. But to begin the week, the further we move away from the Vantage Point T-cross long at 85.25, the more likely it is we're going to return to it. So again, I think by the middle part of the week, the latter part of the week, we should see oil dropping. Now, with Bitcoin, once again, Bitcoin remains flat, but you'll notice that the extremely high correlation Bitcoin has to the S&P 500. And when the S&P 500 tanked, Bitcoin didn't follow it. It held relatively firm above the 18,500 mark. Now, we're running sideways. What I can tell you is at least over the, since about 2016, 2017, October is one of the strongest months for Bitcoin, going into about mid-November. So I'm still looking looking for a rally here. But again, it needs to get moving. But the correlation, what I'm looking for is a breakdown between, right now there's a 98% correlation between Bitcoin and the S&P 500 and the NASDAQ. So if that correlation can break down, then Bitcoin could still go higher, even if the stock market goes lower. But the immediate move right now is still down. So we'll be looking for Bitcoin to rally potentially later in the week or early next week. But for now, sideways, T-cross long, 19,752. If we can get above this level and stay above this level, then clearly that seasonal play could still be there. Now, as we look at the S&P 500, this is the one that's concerning, not just for stocks in general, but also potentially for Bitcoin. Now, what I've done over the last month or two is go to the monthly time frame in the VP Plus software, look back over the year, and identify this critical support level. Now, the market tends to get very bullish on stocks at the beginning of the month, and then by mid-month, it hits the reality that stocks are not in great shape here. So right now, you can see that in the month of October, we've had that initial open push up, but that's only about halfway up of last month's monthly bar. This heavy support level has already been breached this month, which I'll point out, which is at 36.36. Now, the structure of this appears that stocks are not going to have a good October here. This could be the only rally we see. But if we can hold above 36.36, which is the June low, then we could see stocks advance. But in my respectful opinion, again, this is very unlikely until mid-November. I think that we could see a final push to the downside on stocks for 2022. And if that's the case, it would likely happen very soon. But again, watch this level at 36.36. If it doesn't hold, you do not want to be long the S&P 500. Now, as we go into some of our main Forex pairs, the first one, the Euro-US pair, once again, we just couldn't get any kind of real traction on longs. We've come up to the verified resistance high. That high coming in about just over parity at 1.0050, and then down we went. We've come right back up to that level. The euro is a very, very high correlation, guys, to gold, about 90% positive correlation. So when gold failed, you can see that the euro followed it right back down as the dollar regained traction. So right now, we're breaking down. This red dashed line is the monthly opening price. The blue up here at 113.67 is the yearly opening price. We're now slipping below both of these. If we hold below that point in time of the opening price of 97.86, then we're likely at the very least looking at a minimal test of the low of 95.36. We can reassess if we're going to break down below that, but right now I would say that 95.36 level is definitely in the crosshairs. And the one point thing, excuse me, here, let me just go back to that for 1 second so everybody can see where my opinion is coming from. The MA diff cross, you can see that this pink line represents the medium-term crossover, and this medium-term crossover and the slope of this is failing. The long-term predicted difference, just like gold, or like the dollar index, excuse me, but inversely is failing to get above that zero line. So unless we can get above the zero line and stay above that, it's clearly bearish. Now, with the US Swiss franc, once again, I think we're going to come into some very stiff resistance up here above parity. It's a question of whether the dollar can make enough gains to overtake the Swiss franc. The Swiss National Bank also hiking rates. So it is still the carry trade, but it's not the same as the Japanese yen. The Bank of Japan is not hiking anytime soon. Unless they change their rhetoric, which is possible. But the Swiss National Bank is getting a little bit more hawkish here. So the dollar has struggled a little bit. But for now, we've had multiple retracements this week. You can see that using that T-cross long as an actual pivot or entry point is extremely powerful. 3 days in a row, it bounced off the exact same low about the 97.80 mark, and then we've rallied higher. But for now, we want to make sure we're holding above that monthly opening price at 98.72 if the rally is going to continue. Right now, the main indicators suggest that it will. The predicted differences are rolling back up. Our neural index and neural index strength is good, and we have momentum building in the predicted RSI. Now, with the pound dollar this week, the pound recovered to some degree this month, but again, you can see we're just not getting over these verified resistance zone highs at the 117 mark, and this month we're not even close to that. So we've had a little bit of a rally, yet another failure, but as you can see, we've got our T-cross long at 112.43, and we have our the monthly opening price at 111.58. So those are your two sell points. If the S&P 500 breaks down and moves lower, the pound will absolutely follow it lower. This could lead to a sell-off in oil prices. Also, multiple trades can spin off of these intermarket correlations. But for now, 112.43 is a very stiff level of resistance, but 111.58 can't be ruled out either, because again, these indicators in Vantage Point are rolling over to the downside, suggesting again that the pound is getting ready for potentially another retest of the low of 103.49. Now, as we look at the dollar yen, this is probably one of the more frustrating pairs to trade. It's sitting here stuck above the T-cross long, getting slightly over the monthly opening price. That's at 144.52. But again, if this pair breaks down below 143.79, you're going to see a very significant sell-off. Now, if the S&P 500 and the global equity markets tank, that could be the trigger that finally sends this thing lower. But at least with my own direct client base, we've more or less avoided this because of the Bank of Japan's constant interference in the markets. They want the yen weaker. The yen's too weak. Now they want it stronger. So whenever these central banks are on the prowl, I usually stay away from these types of currency pairs because the volatility will usually be ×3 or ×4. So again, as long as you know your main level, 143.79, in my respectful opinion, setting a sell order just below that would be reasonable. And if it does break down, you'll be sitting there waiting for it. Now, as we look at the main equity-based currencies, what I refer to them, the CAD, the Aussie, the New Zealand, these are all based around the S&P 500. And you can see that we've had a retracement on the US CAD back down to exactly the T-cross long at 134.82. And this, to me, is a significant warning sign that the stocks could be in trouble here because oil prices have moved considerably higher, albeit because of the OPEC meeting and the OPEC statement. But still, you can see that the buyers came right back in down around this 135 level. But the T-cross long at 134.82 is what provided the main support. So again, if we can clear this red line, the monthly opening price, 138.16, then that could take us to the 140 level fairly quickly. So again, looking at the indicators, they're a little bit mixed, but the predicted differences are starting to turn back up. Our neural index strength, I don't care for the slope of that, but it is in Friday trade. But as long as we're holding above 135.28, longs are clearly in play. Just keep a very close eye on the S&P 500. If it breaks down below 136.36 or 36.36, excuse me, on the S&P 500, then the CAD will respond immediately. The US CAD, the CAD pair will go higher. The same thing will happen inversely with the Aussie and the New Zealand. If the stocks tank, and these intermarket correlations are certainly suggesting that that's possible, then the Aussie would plummet. So would the Kiwi. So right now, our price on open on the month, 64.07, and our T-cross long, our critical VP pivot at 65.42. That's the level. As long as we're below that, shorts are in play. If we get above it, then we'll see a long, but it would take a significant rally in the S&P 500 to support that. The exact same thing for New Zealand here. You can see that New Zealand right now is just a hair stronger than the Aussie, but this is likely because of the Aussie-New Zealand currency pair that people are selling Aussie-New Zealand they're indirectly buying the Kiwi. So that's helping the Kiwi, but ultimately it could fall too. We look at the neural index strength breaking down below the zero line. Our predicted difference is failing and turning negative. This suggests that there may be better value selling New Zealand US than Aussie US at the current time, but either way, they're tied to the S&P 500. So with that said, this is the Vantage Point AI Market Outlook for the week of October the 10th, 2020.